take it across to Vinay Rajani before we, get in Ajay Bagga to talk about what he's making of the market right now. Vinay, any interesting trading opportunities or trends that you may have picked up that you think are going to at least dominate this week when we'll be struggling with hardly any news flow and low flows too?
Yeah, so you're talking about the recommendations that I have, right?
Yes,
Aisha?
Vinay. Yes.
Yeah. Yeah. So as we have been talking about the pharma and healthcare sector outperformance, I'd like to go long in Sun Pharma, which is looking very strong on the charts and quite resilient move. So Sun Pharma can be bought here. 1880 should be the entry level. Stop loss is 1855 for the trading on the higher side. I'm expecting a target of 1930. The second pick I would go is the short side, Axis Bank. So Axis Bank has been underperforming, and the charts are suggesting that it is into a continuation of a downtrend, and that should continue from here also. So Axis Bank January future can be shorted around 1077. Stop loss can be kept at 1092. This is a small stop loss, but on the lower side, I'm expecting a target of 1050. So one on the long side, which is Sun Pharma, and one on the short side, which is Axis Bank January future.
Those are the recommendations coming in. Vinay, on that note, we'll let you go. But Ajay Bagga with us also on the show. Ajay, to the point that Vinay was also talking about, the crack in some of the industrial and capital good names. One would assume that around budget, there would be increased expectation of perhaps private capex picking up. First half was bad. Everybody was pinning hope on the second half of the year. What then explains this kind of sharp drops in the prices of capital good companies?
Yeah, I agree with you. Normally, with the budget coming up, we see railways, defense, infra, cap goods, all these stocks going up. So today's move, I couldn't really tell you, but overall, the issue has been slow government orders and slow pickup in the private capex. That we have seen because demand has been quite constricted. We have seen private capex getting postponed as well. And then, as far as the government as the biggest spender in the economy, they held back their hand, and the infrastructure spending has not happened as per the budget, and it has been quite slow. We lost about 4 months on the national elections, and the catch up was expected for November, December, but we have not seen that kind of huge orders being announced or tenders being issued. So a bit of a problem on the capex side, and maybe these were priced to perfection already, weren't cheap, and we are seeing a sell-off there. That maybe it's a two quarter catch up that will happen, and it's not going to happen in the next quarter.
Ajay, what trends do you think one would get to see this earnings season? And does it seem like, the earnings downgrades would still trickle in because there will be that pressure on most sectors?
Less than last time, Aisha. The good thing is expectations are very muted. So nearly every analyst is talking about muted expectations, and not and we are going in with downgrades over Q2 already factored in, and the numbers are showing that the quick numbers in the economy are not pointing to any turnaround. That we had anticipated that second half would see rural demand pick up. You see the credit card data, which again is too small for the economy of India's size, given the lack of penetration, but a 16% drop month on month in credit card spends between November and October. That's a pointer. So 4.5% growth in urban demand, 5% year on year growth in rural demand is not enough for this economy. Too much taxes. You were talking in the insurance segment that you just played out, that the insured amounts to the GDP ratio has been coming down. So GDP might have grown, but the insurance penetration, again, a very huge amount of GST being levied on premium. So these kind of things need to be looked at very closely by the bureaucracy and be to be put up. And right now, going into the budget also, there are no anticipations There was a Reuters article on some amount of relief to middle class, and thankfully they described middle class as somebody earning 15 lakhs or lesser per year, because in the post-budget commentary last time around, all the big secretaries of the government of India were saying the 15 lakhs is a very rich person. So unless there are tax cuts given into the consuming classes, or right now the bureaucrats model has been tax as much as you can and give the amounts out as dole outs to the poorest classes. That's needed in a country which doesn't have a safety net like India. I'm not detracting from that, but what that has caused is the consumption basket has nearly doubled in price for the middle classes over the last 5 years. Living expenses have become very expensive, and without a surge in wages, which has not happened, or employment, if more people came into employment, again, that could have got masked out. Again, employment has not happened on that mass scale. So then the third thing is to pump prime the economy. You do big infrastructure projects to put money in the economy, and secondly, you give tax cuts to the consuming classes, both of which were lacking this year. So that would be the expectation from the budget. Now let's see if anything comes, or it's more a pedantic, mediocre bureaucrats budget like the ones we have been getting recently.
Okay, point taken. That's the view coming in. Hold that thought. Just news at the bottom of your screen where Adani Enterprises is looking at exiting the Adani Wilmar business, and that they're doing in a two-part transaction. 13% of the stake in by AEL will be sold to achieve the minimum shareholding requirements, and Wilmar International has agreed to pick up 31% stake which was held by Adani Enterprises. This will mean that, of course, they will fully exit the business, and as a result of that, the nominees which were there from Adani Enterprises will also step down, and that was the flash at the bottom of the screen wherein a couple of these board members are likely to resign from their positions as well. There could potentially be a name change as well, and the proceeds from the sale will be utilized for turbocharging growth in the core infrastructure platforms in energy and utility, transport and logistics, and other adjacencies in the primary industry. So the company clearly looking for growth capital in its mainstay, which is infrastructure and core infrastructure, and getting out of Adani Wilmar. Let's pull up the stock of Adani Wilmar as well and see what kind of reaction it's seeing, because it's going to get a new so-called promoter at board, in the sense that Lens, which is the wholly owned subsidiary of Wilmar International, will be the one which will be taking over the majority stake of that. So some of these stocks will be in focus on account of that. They're expecting the deal to be consummated soon, and of course it is subject to customary condition precedents, including receipt of applicable regulatory approvals, but that's the latest coming in. And this, Aisha, further strengthens AEL's position as country's largest incubator. We have seen time and again AEL has been used as a platform to build up and scale up businesses. Then it's demerged into individual names, and perhaps now Wilmar has reached that level that they're able to give it away to Wilmar International.
Oh yeah, absolutely. And no wonder that the stock was actually holding up so smartly from the word go today, and it's now sitting at the high point of the day, a solid 8% move. And the move, mind you, has come in on the back of big set of volumes in a quiet week like this one. In excess of 7 million shares traded already on this. Ajay, not specifically on the company or the group, but you want to come in on the news?
Yeah, Aisha, again, in a conglomerate, the valuation becomes difficult if you have infrastructure and you have consumer-facing businesses. So that way, it's a good move from a conglomerate perspective. Secondly, deleveraging, getting more cash in, I think that's always welcome for a company of this size. So overall, if you look at edible oils and stuff like that, very difficult. It can be up plus 20%, minus 20% in a year. That's the trouble. We have seen Indian companies go belly up in taking positions. The foods businesses are better, more steady, but then that's a distribution game, which conglomerates normally have not been very successful in. That B2C and Then the distribution chain management, keeping the distributors happy, keeping the quality controls going. Now, having an MNC always helps to at least get in those quality checks and the learnings from abroad in. But I would say a cleaner structure is always better. And what you were just saying, spinning off companies into particular business models always gets you a better valuation than a conglomerate structure valuation.
Sure. The other thing to note is, of course, the overall market capitalization of Adani Wilmar is close to 42,000 crores. The stake that Adani Enterprises total holds is around 44%. The valuation of that at the current market price comes out to be, what, 18,400 crore thereabouts. So that's the value unlocking that's happening for Adani Enterprises. Of course, 13% is something that they're selling out, and the rest perhaps is going to be, transferred or acquired. Around 31% will be acquired by Wilmar International, and 13% will be sold out. So we'll have to get the numbers right in terms of what exactly comes as cash on the book. But what is for sure is that there is a bit of a value unlocking of sorts happening at Adani Group, wherein they're taking out the money from Wilmar to A, meet the minimum public shareholding requirements, and secondly, to fund the growth, because core infrastructure is where they want to focus on. So whether it's energy, whether it's utility, whether it's transport, whether it's logistics or other adjacencies in the primary market, that is where they're trying to put in money and incubate further some of these segments before they plan to perhaps hive it off. So that's the latest coming in. They do say that Adani Wilmar is well positioned to benefit from the huge scale of operations. It has 100% urban coverage and presence in over 30,600 rural towns and exports to over 30 countries. So that's the latest coming in, and maybe we'll try and connect with some of the guests to get more opinion in terms of what exactly it entails and it means for Adani Enterprises, Adani Wilmar and the group. But for now, this is the latest news flow, Aisha, that we're tracking.
Oh yeah, absolutely. Stock holding up a good 185 points as we speak. That's Adani Enterprises in trade for you. Wilmar, though, has been a little bit of a choppy ride. I think it fell down, and from there a smidge of a recovery, which again is getting sold into, just hovering around that 328 mark. But I think we have Devin Choksi as well with us. If we can just take it across to him very quickly and get in a reaction too. Okay.
But maybe in the meantime, let's take Naresh's view, I guess, on Adani Enterprises and Wilmar on the stock. Naresh, any sense on the charts of these two names?
So not really. Adani Enterprises, the only good part is today the stock is trying to get higher above the gap down price of 25.50 and could again go back and cover the whole gap around the 2800 mark. But it could be a tough ask to reach 2800. But the other names like Adani Ports have done that recovery. Again, slipped a little. So for now, 2700, 2750 is what I would expect, and then drift again downward.
Right now, what we're seeing on Adani Enterprises holding up 7.6% as we speak. I just want to see what the rest of the market as well is up to, and more importantly, what some of the other Adani Group entities as well are doing, and whether or not there is any rub-off of sort. Of course, there's no news linkage, but typically you tend to see a sentiment rub-off. Not quite. Most of these stocks, of course, have cooled off. Adani Power, of course, is the one which is seeing a big shoot up. Adani Energy as well, 2.5% of a scale up. Like Anisha was just reading the press release that the money is perhaps going to be used for the core businesses of the Adani Group. And I guess, power would be the first name that would come up, and which is why you're seeing a big spike up on some of these names, and ports, of course. So that's that. But Ajay, talking about the overall infrastructure space, what's the thought right now, especially given that, budget is upcoming and we would anticipate some sort of, increase in allocations?
Yeah, I think allocations will be flat, Aisha, because we have not been able to spend the 11 lakh crores. So the economy is reaching its capacity. So even if there is some cosmetic moving around the accounting heads and to show a little bit higher, you will not be able to spend 11 lakh crores. That's what's troubling the market to some extent. And more than the budget, I think Jan 20th becomes a very seminal event for global markets as Trump comes in. What will be the first few executive orders that he gets in? And from now through January, what will be the success rate of his nominees going through the Senate? The Republicans are also a split party to that extent. There are moderates, conservatives who don't like some of the nominees that he has put in. Some of them got shoved out earlier itself. But he will have to get a lot of his nominees through. And then what happens post Jan 20th? I think global markets will be on edge on that, Aisha.
Absolutely, Ajay, but so good to have you on the show. We'll let you go on that note. Naresh, you too.
If you like this video, then like, share and subscribe to ET Now.